Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video in terms of the top 5 options plays for the upcoming week. Now, on the channel, we do run the put wheel strategy for our trading account, meaning we are looking to sell puts at designated strike prices in hopes of gaining all of that juicy weekly premium in our pockets by the end of Friday close. And ever since we've started this series, guys, in the last 4 weeks, every single one of our plays has been profitable, meaning we have a 100% win rate so far for all the plays that we've recommended on the channel to take a look at. So let's just keep the win train going. Now, this is a very easy strategy to run, whether you're a beginner, intermediate, or advanced investor. It provides weekly income to supplement a portfolio and is a very conservative trading strategy. Every single one of the trades that we do take here usually always have a 90+% win rate probability, meaning that if you take the trade on a Monday or Tuesday morning, 90% of the time it will be profitable by the Friday close. And if not, we will write covered calls against the position in the event we get assigned to generate even more premium on these trades. So without further ado, guys, let's get into today's video. We're going to recap the strategy rules. Number one, we're going to recap the last 5 plays that we took last week, and then we're going to do the upcoming 5 plays for the week. So let's get right into today's video. And if you haven't seen my video in terms of how the strategy works, you can always click the link in the top right corner description. I'll leave it up there right now. It's a 30-minute video that I put together that goes a bit more in detail as to how I run the strategy. But in this video, it should also be fairly obvious. So let's take a look at some of our rules here. So number one, in terms of writing puts, guys, we want to be writing puts on a solid company. Please never write any options on any stocks you do not want to own. That is a very important rule. It just means that if you get assigned on a stock that you don't want to own, managing the position is going to be worrisome and more difficult for you. Number two, we want to be writing these things on a red or flat day. Now, this just improves our probability of success by Friday. So we always look at the expected move of a given stock. Let's say the expected move for a given stock is 3, 4, or 5% for the week, up or down. We want to be targeting the lower end of that expected move. And if we get the stock to open red on a Monday or Tuesday towards that expected move to the downside, it just improves our probabilities of being able to write lower and lower strikes and improves our probabilities of not being assigned. Number three, we want to be writing puts on a stock that is in a monthly uptrend or in a long-term range. Once again, this just improves our probabilities of not being assigned, since if we're in a monthly uptrend, your long-term bulls are in control and should be buying those dips. And if we're in a long-term range, we're going to have some very juicy big support areas to be basing our trades off of. Number four, very important, do not write any puts, on stocks that have earnings in this upcoming week. Stocks are going to be very volatile in the week leading into the earnings, and you do not want to end up with a negative surprise in your portfolio. I know that the premiums can be very juicy, but there's also a lot of risk being associated with it. So please do not write any options leading into a week of earnings. Now, number 5 is going to be, we want to be writing these things at a support area or a breakout retest zone. Now, support area is going to be fairly obvious. I'll point a few examples of it in the video, in the plays that we saw last week and the plays we're looking at this week. And the breakout retest trade is very simple. I always bring out the example of Autodesk. So you see Autodesk was trading for a very long time here in this beautiful weekly range. And then we finally got the breakout of the range to the upside, weekly uptrend confirmed at that point. And we're looking to retest the top end of your range for a breakout, retest, and then run. And that's exactly what happened on Autodesk. These represent very high probability trades as well. So that's the breakout retest trade for you. And then one of our last rules here, we want to be writing options premium here towards the zone of 0.5 to 1% weekly. That's very simple. Just looking at annualized ROI, if you're making 0.5% on the trading account every single week for 52 weeks, you should have an annualized ROI of just about 25, 26%, notwithstanding any covered calls that you may write, which could even benefit you even more, and 1% to the higher end of the range. I really like to stay between the two, never really going over 1% because it becomes a bit too risky and your risk of being assigned becomes a bit higher. Now, moving on to the last point here, we want to be writing at or lower than the expected move. So you'll see that all the plays that I recommend are going to be below the expected options move for the week, which is just a probability that Wall Street attributes to any given stock in terms of how much it can go up or down in a given week. So we always want to be writing below the expected move of the downside for the week. It just once again improves our probabilities of not being assigned. And lastly, we want to set a take profit order at 90% of the contract contract value. The beautiful thing about this strategy, guys, is it's basically a set it and forget it strategy. You really only need to be scouting for these plays for about 15-20 minutes on Monday morning, 15-20 minutes on Tuesday morning, and then just let the plays ride out until Friday. And since you won't probably be at your computer Wednesday, Thursday, or Friday, that's why we're setting a take profit at 90% of the contract value, meaning if you write a contract for $1, you want to be setting the take profit at roughly 10 cents to buy it back. That way, in the event, if it goes 90% profitable on Wednesday or Thursday morning, and you're not at your computer, that just takes profit automatically. So that's a very, very easy rundown of the strategy. But like I said, if you haven't seen the video on how I do this strategy in an in-depth fashion, well, I'll leave the link not only on the top, but I'll also leave it down below in the description. So let's get into last week's plays. So the first play for last week in terms of the recap here was CELH. Now CELH, we loved it because it was constantly going towards our area of support down here, roughly $50 and $48. And we've been playing this for a few times in the past couple of weeks. And last week was pretty much the same. We were eyeing the $48 put for the upcoming week, and that was a very good trade. As you can see, this is the Monday candle, and it ever so slightly dipped down into the $50 range, which did open up the $50 puts. Now let's take a look at the value of that contract over the course of the week, and you'll see right here that CLH on the 5th, which was the Monday, we actually had a nice spike when the market came down here for CLH into the $50 range. The $48 puts here up top did get all the way into our 0.5% rule. We were looking for 24 cents, and you can see for a large part of the day on Monday, they were trading above 30 cents. And then obviously CLH just went on a tear the rest of the week. So those put options would have ended up worthless. You would have been able to pocket all of the premium. So once again, very beautiful trade on CLH. The second trade was Caesars Entertainment. Now, once again, we'd been playing this one for 2 weeks back to back, and last week was pretty much the same. We were looking for the $41 strike, and lucky for us, on Monday, the market opened a bit lower on CLH, down in the mid $42 range. We were looking for the 41s, which would have been the bottom area of our support zone that we've been in pretty much for over a year and a half at that point. So very, very solid area of support. And the premium on this was fairly juicy here, guys. We were looking for the 41s. We did have a very nice area, a very nice buffer to be working off of, right? Roughly a 4% buffer to the downside. The expected move was 41.61. So we were looking below the expected move at about $41. And you did have a trade open up here on Monday morning as well. Let's take a look at the premiums for the Monday session. So you'll see here that Caesars $41 puts on the 5th, which was the Monday. They did open above our 0.5% rule. We were looking for 20 cents on the bid, and you can see here for that most of Monday and even Tuesday morning, you could have got well above 20 cents, even as high as 35 cents on the bid here for the Caesars 41 puts. And obviously they ended the week pretty much worthless as the stock rallied. So once again, we were able to pocket all of that premium, and I did take Caesars myself in my own trading account. If you haven't seen that video, guys, I always do the daily market recaps. Monday and Friday videos are where I show the portfolio in terms of the holdings and the trades that we took. Now, the third trade that we were looking for was Google. Now, we loved Google down here in the 141 area. 141 was a very beautiful area of previous resistance and now coming into beautiful support, and the bulls were in full control of your longer term weekly uptrends. Now, they had a nice little dip here after earnings, and we were looking for potentially on Monday to revisit the lower 142, 141 area. We wanted to get as close as possible down to the support range 140 to 138. However, Google unfortunately did not drop enough. Monday it rose, Tuesday it rose as well. So it never really opened those contracts up for us. So Google, unfortunately, we were not able to take that trade. As I'll show you right now, the 141 puts, even at the higher end, you can see right down here that unfortunately they never really got to our target. Half a percent of 141 would have been about 70 cents on the bid, and you can see the high for Monday's trading pretty much was only about 40 cents. So unfortunately, we were not able to take Google trade, but the idea was very good. The bulls had reacted nicely from the previous Friday session from this area, but we're never really able to retest this zone to get a trade on Google. So unfortunately, we did not take a trade on that one, and we just had to sit this one out. Now, the fourth trade, that we were looking for was Charles Schwab. Now, Charles Schwab was one of my favorite, still is one of my favorite financial companies in the market, as they do have one of the largest brokers in terms of trading volume in the U.S. markets, well over and above anybody else, as they most recently merged with TD Ameritrade. And the strike that we were looking for, was pretty much in the $61 to $60 area. You can see that this has been a very juicy area of support in the past. Was support back here And we were really struggling to break through this area as a whole. But now that we're over and above it, I really like Charles Schwab just in the potential of setting the weekly higher low for further trend expansion. We also had nice moving average confluence right down here in the 6160 area. And it's really been a juicy area of support in the past, was the previous all-time high at a certain point. So I really like the $60 level for Charles Schwab. I think it's very good value in the stock. So the expected move was $61.48, and we were looking to get as close as possible or below the expected move, and we actually got a trade opportunity on Monday and Tuesday morning as well. So you can see here the stock dipped into the mid $61 range, and it did open up some fairly decent contracts for us. So let's take a look at that right now. If I can pull up my premium contract screenshots here. So you'll see that on the Monday session, we were looking for the $60 put, which was below our expected move of 61.48. And we all actually got the trade open up on the Monday and the Tuesday. So 0.5% would have been roughly 30 cents. So you saw here that on the Monday morning, we actually got an opportunity to write for 30 cents. And even on the Tuesday, on an annualized basis, even 25 cents would have not been so bad, considering you would only have had 4 days of remaining trades to do. So the 60s were opened up. I did not take this one myself, but as you can see, it was a very good trade. Schwab ending well above the $60 mark, and it would have been some very good cushion as well here, guys. Even after the Monday trading session, right, from 61.76 down to about $60, we're talking about pretty much, you had about a 3% cushion, right? So very, very decent trade as well on Charles Schwab. Very happy for those of you that would have been able to take that one. And the last trade that we were looking at for last week was Tesla. Now, Tesla, for a few different reasons. Number one, we were severely oversold on the RSI coming off of this extended daily downtrend here. And we had a very beautiful area of confluence. We had horizontal support between 180 and 170, this 2 yellow lines right here. And we were also coming to the lower end of our downtrending channel line, which is a very nice area of confluence. Couple that with your oversold conditions, and it made a very good case for a potential bounce trade being able to happen. So as you can see here, we were looking down here on Tesla, and we were saying when we took this, when we were forecasting this trade last Sunday, we said if Tesla opened minus 4 or 5% on the Monday, you could potentially even get lower than 170, even maybe 165. So we were looking for the 170s, but I was saying as low as you can possibly go while still respecting your 0.5% rule. So that'll be anywhere between 170 and 165. Tesla obviously ending well above that. And take a look at these juicy premiums here, guys. The 170s now on Monday morning, right? If you would have been a little bit nervous after this really hard open on the Monday, right? The 170s may have been a little bit too close for you, right? 170 from 175 would not have been that far away. It would only been about an extra 2.7%, but the 165s did open up on the Monday morning. Take a look at this juicy premium that you could have gotten on Tesla stock here for the Monday morning for the 165 contracts. Right? Let me open it real quick here, guys. Well, let's show you the 170 first. If you went with the 170s, well, that was a very juicy trade. 170 puts, you can see those contracts went all the way up almost to $2, so well above our 1% rule. But as I was saying, guys, it was maybe a little bit too close, a little bit too aggressive for some traders out there. So if you didn't like necessarily the 170 puts, we did have the 165 puts that did become available. You can see here on the Monday morning, on that 5th, right, February 5th, they would have gone up almost to about $1. So for a large portion of the morning here, they were trading between 80 cents and $1, and that was our 0.5% rule. 0.5% of 165 is roughly 82.5 cents, right? 82, 83 cents, and you would have been able to pick up that trade. And at that point, guys, it would have given you a very nice cushion here from the 175 lows all the way down to 165. That would have been a buffer of about 6% to the downside, and the expected move on Tesla last week was around 175, 174. So being able to get 5-6% below the expected move was a very juicy trade in itself. So that's pretty much all of the trades for last week. We did have a couple notable earnings plays that I was also looking at. We wanted to see if we can maybe get Fortinet down in the $55, $56 level after their earnings. Unfortunately, they went up after earnings, so that trade was never being able to be made. So unfortunately, we were not able to get that one. And the second trade we were looking for earnings after earnings as well was NXPI. NXPI, we were looking for anywhere between $205 down to about $200. This beautiful green box of support down here. But same thing as Fortinet after earnings. Unfortunately, they just really came up and they never really looked back. So the trade, unfortunately, would not have been able to be made on NXPI. But the ideas for both of those trades were very good. So hopefully you guys were able to learn a little bit of how I look for my after earnings plays. And we'll give you guys 2 after earnings plays for this coming week as well. So with all those recaps being said, let's get into this week's top 5 options plays. And we're going to start it off with a good one in the name of Palantir. So Palantir has been very, very volatile before after earnings, and they're in a very nice period of doing the breakout retest trade. So if you remember from my intro, the breakout retest trade is when you break out of a big range here to the upside. We're looking to retest the top of the range and run. Well, Palantir could be pulling off somewhat of a similar pattern. You can see this beautiful breakout here of your previous extended range that we've been trapped in for the better part of the last 6 to 8 months at that point. Now we're breaking up into the higher levels. So what are we going to be looking here for, guys? We're going to be looking for the retest of the top end here of this channel, right? So previous Palantir channel from the IPO period was roughly down for between about, let's say, $21.50 all the way up to $28. So now that we're in this area, and now that we have become severely overbought on the daily, could be due for a little bit of cooling off. So the breakout retest of this range, we're going to be targeting as close as possible to our area, 21.50. The expected move for Palantir on the week is about $23.06. That represents downside of roughly about 7.6%. But if tomorrow on Monday, Palantir opens negative, let's say, by a couple percentage point, it may open up the $22 strike. And that's the one that I do want to look at. So let's take a look together here at some of your premiums here for Palantir stock leading into tomorrow. And we want to be eyeing the $22 strike. So as you can see right now, as of the Friday's close, the $22 strike was already providing 0.5% in premium. 0.5% of 22 would be about 11 cents. So if we do open negative here on the morning tomorrow, we may be able to find the 22s or maybe even the $21.50, right? For in terms of the 0.5% trade, as close as possible as we can get to this 21.50 mark. And that would represent a very good buffer here, guys, you know, anywhere between 8 and 11% to the downside. So if we can really find the premium on the 21.50s for tomorrow morning, I would be very likely to take this trade. So let's take a look at the 21.50s and the $22 ranges for Palantir for tomorrow. I do think it's a very, very solid trade indeed. Now, the second trade we're going to be looking at is Pepsi. Pepsi, one of my favorite companies in the market, and they had earnings last Friday pretty much, and the stock took a little bit of a tumble of about 3.5%. We went over the earnings on the channel last Friday, and truly it was nothing that bad for Pepsi, just a little bit of soft guidance for 2024, but nothing inherently wrong with the company. So Pepsi, we're going to be looking here for the $165 strike. Now the expected move for the week is 165.25 for the downside, and that does represent downside expectations about 1.5%, right? So we want to be looking below this expected move, most likely at the 165 strike. You can see how many times the 165 area has acted as support in the past, and Pepsi is currently in a significant little downtrend off its all-time highs, right? We can see that stock is currently trading, you know, roughly about 15% off its all-time highs. And usually when Pepsi is down below this 26 moving average, this orange line right here, usually it does tend to snap right back to those moving averages. And that's what's really happening right now. So Pepsi and Coca-Cola alike currently going through a little bit of a bottoming process here after having soft earnings back in Q3 back in September, right? We're currently still in the accumulation phase, and I do expect Pepsi to be able to recapture these levels, but we are going to be looking at the options for this week. Whenever Pepsi comes down to the 165 level, I am always interested in playing it as a whole. So let's take a look at some of the Pepsi options, and you'll see that Pepsi unfortunately does not have a lot of volatility, so we do need to play these things pretty close. So you'll see that the 165 strike right now only has about 45 cents in premium. Now to get 0.5%, we're going to need at least 80 cents on the bid here, guys. So you'll see Pepsi currently trading 167.67. So if tomorrow it opens red as well, let's say we dip into the 166 area tomorrow, even low 166s, well, the 165s may just open up here for your 0.5% rule, which would be roughly 80 cents. We're going to be keeping a very close eye on that. And obviously, if Pepsi just tumbles tomorrow morning through our support, 164, 163, well, we're going to be targeting the lower end of that range at that point. I'm not expecting such a big fall through on Pepsi, but let's say it does happen. At that point, guys, I'll be looking for the 162s or the 160 strike, 80 cents on the bid minimum. So just keep that in mind for Pepsi. Very beautiful company, very nice area of support as well. Would not be nervous taking this trade whatsoever. Third trade is once again going to be Tesla for the same reasons as the ones we took them last week. So we're just looking for the bulls to potentially reset a daily uptrend here. So if we do get a little bit of a dip on the Monday or Tuesday morning session, let's say down back into the 180s, mid 180 range, That's where we're going to be looking to take puts. Anywhere below 180 is where I'm interested for Tesla currently here, guys. So you'll see the expected move for Tesla is currently 186.29. So that represents about a 3.76% move to the downside. We want to be below that, preferably below 180, which is our massive area of support right here. So let's take a look at our Tesla premiums and see how they're doing below 180. And you'll see here, guys, that we don't yet have the premium, right? So 0.5% at 180 would be about 90 cents. So we would need Tesla to have a little bit of a red morning tomorrow, or maybe even Tuesday morning, dipping down to the 180 area. And then we'll see, guys, the same thing as last week. If Tesla opens extremely red tomorrow, let's say they have a minus 3-4% day, open at around 185, 184, well, then we're going to be looking a little bit lower, maybe even the 177.50s, the 175s, as low as possible while respecting our 0.5% rule. 80 cents, 90 cents on the bid. We're looking for 180 down to about 175 range, as low as we can possibly get while still being within this support area. I do still believe that this is really a nice bottom area to be picking Tesla in. And I have been writing Tesla options fairly aggressively in the past couple of weeks, ever since earnings, ever since we've been down in this range. So it continues to be one of my favorite trains down in that range. Fourth stock is going to be Expedia. So Expedia, guys, had earnings last Friday or last Thursday after the close, excuse me, and the stock went down about 17-18% on Friday. You can see that drop right here if I move myself to the side. But really, we went through the earnings on Friday together on the channel, and there's nothing bad with the company, guys. Company's posting record earnings per share, record revenue growth, decent profitability. The only thing that happened is the CEO stepped down unexpectedly, not because anything bad is with the company. He just feels that his time with the company is pretty much done at this point, and he's ready to pass the reins on to somebody else. But this did open up a very beautiful breakout retest trade for us. So take a look at this beautiful range that we were in for a very long time before breaking it to the upside. Now you can notice we're retesting the top end of that range. We're talking pretty much 125 down to about $120 is the sweet spot, in my opinion. Now you can see as of Friday's close, we closed at roughly $131. So we're going to need a little bit more dip from Expedia to be able to make this $125, $120 trade happen. But if we do open red on the Monday tomorrow, I do think it's a very juicy opportunity for a beautiful company. You'll see this company has been pretty much uptrending ever since its IPO, currently still stuck in this area right here. Obviously, the pandemic was very bad for them. They were on the breakout, and now we're just kind of down below in this area right here. But I do believe in the Expedia's ability to set the monthly uptrend as strong demand in travel and entertainment does continue for your consumers. So we're going to be targeting the 125 down to about 120 area. I really like that area a lot. So let's take a look together here on the premiums for 125s all the way down to 120s. So the 125, you'll see here that we need to see about 0.5%. This is actually 0.5%, right? 0.5% of this would be about 63 cents. If you don't know how I'm calculating this in my head, guys, just look for half of the strike price in cents increments, right? So if we do 0.66 divided by your 125, that you can see there that that's just above 0.5% for the given week, right? So very nice, currently still in our prime area, 125 down to about 120. We want to get as low as possible here. So if the stock opens slightly red or flat, I will be shopping for 125 and below as low as we can get while still respecting our 0.5% rule. Currently, I still would not be opposed to doing the 125s for the current week. But if we can open up the 124s, 123s, I will gladly do those as well. So that's pretty much it for Expedia stock. And the last one, guys, is going to be Constellation Brands. Now, if you don't know what Constellation Brands do, they are an alcohol, wine, and spirits brands, most notable known for their Corona and Modelo beer brands. And this company has been in an accumulation phase at the top end of its price range here for a very long time. Almost 3 years at this point, right? And the stock is trading at a relative fairly decent multiple, if you ask me. Currently in an accumulation phase as well. We want to be targeting here, guys, the bottom end of this whole range right here, right? So anything below at this point, 235 is going to be a very juicy target for me. So if we take a look at this here, guys, the stock was trading ever since pretty much last October, traded down in this 235 range before your little pop right there. So the stock is currently trying to desperately reset your weekly uptrend to the upside. That's why I really like this lower end of this range for the bulls being able to put in some heavy support, especially due to that monthly time frame support coming in down there as well, right? So if we take a look at our options on Constellation Brands here for your $235 strike, you'll see that there's currently not enough premium on them yet. That's just because Constellation Brands is a bit too far away. So the expected move for Constellation Brands currently is about 238.62. It's about 1.5% to the downside towards the expected move. Now we want to be targeting lower than the expected move, around 235. So tomorrow, if the stock opens red, or even Tuesday morning, if we dip down into the 240, maybe even 239s, you may be able to get those 235s to be able to open up for 0.5%. 0.5%, guys, we're going to be looking for about $1.15, $1.20 on the bid. And you can see currently all that's offered there for our 0.5% rule is around 240. 240 is currently a bit too close to the current stock price. So I wouldn't want to be taking those. Really want to get below that towards a 235 as close as possible. 237.50, 235 is the ones that I'm going to be looking at personally for the trading account, just basing it off our most recent support and our very wide accumulation zone over the past couple of years. So that's pretty much all that I had for you for the top 5 plays. I hope those were educational, and I do have a couple plays that we're going to be looking at for after earnings as well. Very important that we take these after earnings. The first one's going to be Airbnb. They come out with the earnings after the close on Tuesday, so we'll be able to take these on Wednesday morning, either for this Friday or the next Friday. Now, Airbnb is one of my favorite companies in the market ever since they've been able to turn significant profits and significant cash flows. I do believe that they're set up amazingly for the next 3 to 5 years. Now, let's take a look at the expected move for earnings. The expected move for earnings is about 136.57 to the downside. So from current price, that represents an expected move of about 7%. I want to be going a bit lower here after earnings. If for some reason they have a little bit of a sell-off after earnings, maybe like 10, 11% to the downside, guys, I want to be targeting this very juicy area right here. Resistance, support, right? This is going to be 126 to roughly your $130 range. If we can get to 130 and 126, I'll be looking for options here in the 130 down to 126 range for either this current upcoming Friday or the next Friday after that. And we'll be looking for 0.5%, anywhere between 0.5 and 1%, as low as possible. We can get as close as possible to the $125 range here. You can see that, well, I shouldn't be showing you these guys before earnings because the premiums are going to be all jacked up because of your volatility leading into earnings here. But just taking a look at the strikes here for Airbnbs in terms of Friday, this is what I want to show you here, guys. We want to be looking for the 125s all the way to 130s, and you want to see 0.5%. So we'll want to see, you know, if we go for the 125s to 130s, we'll be wanting to see about 62, anywhere between 62, 65 cents on the bid. And they are up there before earnings, but we want to see these same premiums, you know, after earnings on Wednesday morning for Friday. That would mean the stock would have to come really close into there because there will only be 2 days of remaining trading after that. So most likely this will be a trade for the following Friday after that move. I'll still be looking for 0.5% for the following Friday. That would be your not the February 16th, February 23rd. So just keep that on the horizon since I won't be making an update much before next Sunday. So just keep that in mind. And the second one's going to be Shopify. So Shopify also has earnings Tuesday before the open. So we'll be able to play these Tuesday at the open at 9:30. Now, Shopify has run up a lot in the past year, but we want to be targeting an area of previous support right here, okay? So Shopify currently, the expected move for the stock is 79.81. That represents downside of roughly 12% after earnings. Now we want to be going significantly below that, guys, and the area is going to be fairly low. So I want to be targeting anywhere close to the $70 range. Now, obviously we won't be able to get that before earnings. We need to wait for after earnings. So I'm obviously expecting, if I'm shopping for the 70s, I'm expecting a big earnings miss. If we have a big earnings miss and the stock goes below the expected move, let's say 15, 16, 17% to the downside, that would be no stranger to Shopify. Shopify really moves aggressively after earnings. You can see here it moved 22% to the upside. After this earnings in only a few days, it was down around 12, 13%, right? So Shopify can move, but let's say they have a bad earnings and they really dip down below into this mid $70 range. I'm going to be looking as close as possible to $70, which is big previous resistance, previous support as well, should act as temporary support for a nice little bounce zone for the stock. So we're going to be looking for that $70 mark. For the premium, we want to find at least 35 cents on the bid on Tuesday morning after the open for Shopify, if ever they really dip. Obviously, if they dip too close to $70, let's say they go 22, 23%. Well, then we're going to be looking for the 65s, same rules apply. Look for about 0.5%, which should be about 33 cents. So those are pretty much all the earnings plays and other plays that I had for you guys for the weeks. Hopefully you guys enjoyed them. If, as usual, guys, if you did enjoy the plays, please consider dropping a like on the channel. Would really appreciate it. And obviously, if you're new to the channel, consider subscribing as well. We do these videos every single Sunday night, and we do daily market recaps Monday to Friday, where I showcase my portfolio. We also go through earnings for companies, and we do technical analysis on indexes and your major tech stocks. And as usual, guys, if you have any questions whatsoever on the strategy, on the picks, or any other questions, leave them down below in the comments, and for sure, I'll be able to answer you within the first 24 hours. So thank you once again for watching. Have a very good week of trading, and I'll see you tomorrow for our daily market recap after the close. Take care and peace.